Hey everyone, in this video I'm going to talk about my general predictions for the S&P 500 index, which reflect the market trend currently. And I'm going to go over 5 stock picks that I think will do very well over the next couple of weeks. And this does not necessarily mean that these picks will do well on Monday, Tuesday, Wednesday immediately, but I believe that they have potential for some pretty good returns because I believe that the market in general right now is going into a positive uptrend. And I'll try to explain why. So first of all, we do have in this market, if we're recapping ever since the COVID, really huge COVID drop, we've been having a 1, 2, 3, 4, 5 on the upside, and we've been seeing a WXY corrections, which is a complex correction to the market. And the reason why it's complex is because the drops in the market are not as simple as an ABC correction, but there's, as you can see, a lot of upside, downside. It's very choppy motion. And we've been in this correction phase for the past like 2 months or so. That's quite a long time. So investors that maybe started to get into the market around this time might have had some difficulty trying to make some good returns because the market's just not has not been in a good state over the past couple of months. But now I believe that this is the start of a pretty good uptrend. So as we can see, we've had a WXY correction, and this uptrend I believe could be the start of a 1, 2, 3, 4, 5 pattern. So we could possibly see a 1, somewhere around a 2, and then a 3, 4, 5 in the future. So this is why I believe right now is a good time to get into the market. And let me show you some possible buy zones that I think would be a good entry point. And keep in mind, this is just my point from a very inexperienced investor. And it's totally up to you what you want to do with the market. And please don't take this as financial advice because I am not a financial advisor. But so if we zoom in on this increase, we can take a quick fib retracement of the levels over here. So fib retracement from the top of this down to the bottom, and we can drag this out to get some key levels. So if we zoom in to these lines, we can see that we have a 786 level right around here, and we have the 618 level, which is a very good resistance level. And before this video, I drew out 2 trend lines over here to signify this kind of triangular pattern that we're in. And so I expect the stock market to definitely stay within these bounds if we're continuing on this sideways trend. So what this means is that upon break of this upper trend line, which I do expect in the future, we will see definitely some upside in the market. Because once it breaks through this correction trend line up here, I believe that will be the start of the 1, 2, 3, 4, 5 pattern that I showed earlier. So as for we're trying to predict where the second wave of this upside will land us. So for example, I do see a very key buy zone around this zone, but this does not mean that the stock will necessarily drop below this level. It doesn't really have to. What I think the market could actually do is simply just kind of consolidate around here at this resistance and then push upwards. So, and I expect this upwards motion to be happening very soon. Maybe not Monday, maybe not Tuesday, but it should be happening at some point because the market right now looks like it's going to do well. So what this means is if you're a bear and you think the market might, for example, drop back down to this trend line and bounce off again, then you could cost average down these Fibonacci levels, which means you buy some. What it means is you could, like, for example, buy some stuff here. You could buy some stuff over here at this level, at this 0.5. You could buy some stuff all the way down here if you're a bear. Otherwise, if you're bullish on the market right now, this is the time to buy because you're trying to prepare for the upcoming increase in the general market. So personally, what I'm going to do is on Monday opening, I'm going to see how the market's doing, and I'm probably going to buy a lot of my options and stocks for various companies that I think will do well, and hopefully we can see some positive action over the stock market. So that's about it for just the general implications for the S&P 500 index. So now, just a little recap of what I did over the past week. So I put a lot of money, or not a lot, but a decent amount of capital into Cloudflare, and this was an earnings play because they had earnings on the 5th of November. So I bought an option around here, and I bought an option around here. And when I woke up on Friday morning, we were up big on this increase right over here. So what this pretty much means is this is kind of a more of a risky side earnings play, but a lot of the stocks that I will be covering in this video will be some earnings plays. So in general, buying options and hoping that the earnings will be good for a company is very risky. But if the general stock market climate is good, just having a good earnings um, will definitely catapult the stock price and give you a lot of money. So this is just an example of something I did, and I hope to reciprocate for these stocks. So first of all, I'll be going over 5 stocks that I will probably be investing in over the next week to kind of complement this perceived increase in the stock market. So first of all, we have GDRX, which is not a very popular company. It's, as you can see, it's very recently IPO'd, so it does not have much market data at all. But we can see this kind of like consolidation phase going on in the stock price, and we do have earnings on the 12th of November, and I'm going to be doing this as an earnings play because this, if for those of you who don't know, this is pretty much like a pharmaceutical phone app kind of company, and I think that the actual company itself is really good. And if you look on just the App Store at the GoodRx um, app itself, there's been a lot of positive reviews. Even recently, like if you just check the recent reviews, it's all recent, very just a lot of good reviews. So I expect the earnings to be really good, and their estimate is not even like that high. So hopefully we can see some kind of good price action. This is, I don't know how high it's going to go. There's no way for me to tell how high this is going to go, but this is just a simple earnings play. And if the market climate is good, which it should be over the next couple of weeks, then this will definitely give some money to the stock. Okay, so that's for GDRX. And if you're planning on playing options for this, I believe there are options plays for November 20th as well as late December. And I'm probably going to be doing a mix of both of these strike expirations. So if you're very bullish on the stock, you could possibly be doing a $55 November 20th call. And I can actually, so if you're bullish, you can be doing a November 20th $55 call if you're bullish. And if you're bearish, or no, I shouldn't say bearish, if you're bullish, but if you think the stock needs more time for it to react and have a positive outcome, you can do like a December 20th $55 call as well. Those are 2 options you could do. Additionally, you could also lower the strike price of the 55 to the $50. So if you want some more insurance for your call, to say. But I think any call that you do on this stock in the near future should be a pretty good return. Okay, so now for our second stock pick, this is HOG, Harley Davidson. And this is kind of an unprecedented stock because it's like a motorcycle company. And obviously, I'm definitely not a motorcycle person, but this is just merely based off their earnings. So this is not an earnings play. They already had earnings, and as you can see, their earnings did really well. Very good surprise. And what happened was there's a very strict increase in the stock price and then a reconsolidation phase. And I believe that with a good stock market climate, such as what we're predicting for the S&P 500, we could continue to see the stock price increase in the future. So this could basically be just a play depending on the stock market. So it's a little bit more safe, I think, because they had good earnings, for example. Additionally, the stochastic RSI is pretty low. It's not overbought yet, and RSI is increasing. It's doing well. So I think that this stock has some potential for the future. Yeah. So if you wanted to do a stock that's not an earnings play, but could give some promise in the future, I think that HOG is a good, good choice. Okay, so for our third stock pick, this is EXAS, and this is also kind of similar to HOG, where they had really good earnings, and as you can see, they had a increase in the stock price and then a consolidation. So if you compare these 2 charts, it's very similar, and as you can see, pretty much HOG. I didn't really mark this out, but it also kind of has like this triangle pattern, which is very bullish. So once it reaches the end of this triangle, you could see either a sharp increase in the stock price or a sharp kind of decrease and falling out of this triangle. But if the stock market climate is good, I think that it's very likely that it will pop out of this triangle in a very positive manner. So this is following the exact same ideal. Um, so it needs a little bit more time to, I think, consolidate within this triangle, but we could definitely see a pop from this pattern, and which will give really good money for those who invest in it. The safest thing to do when you have these triangle patterns is wait until it breaks above the upper trend line. So if you're not very confident in these stocks, you can definitely wait until it breaks this upper trend line and then throw your money in right when it does that. Because for example, if it breaks around this like 128 level, it's probably going to go up. It's going to shoot up because it's breaking this key level of resistance. So that's a way to play the stock. Personally, for me, I'm a little bit more like on the gambling side, so I'm probably going to throw money in this triangle, and it's only if the market is doing well. If the market is doing well, I'm willing to gamble my money into this triangle. Otherwise, you can wait and see if it has enough power to break through these trend lines. Okay, so for the fourth stock, we have RKT, which is Rocket Companies, and this is also kind of a very newly IPO'd company, and they do. This is an earnings play. They have earnings on November 10th, which is very soon, and they had really strong earnings previously, and they kind of had a shoot up in the stock price and then a consolidation phase. And I think that with Biden getting elected, this company is going to do very well. It has very good predictions from various investors. So this is, I think, a very possible play to do. I think it has some pretty good support around these levels. So you're kind of safe, a little bit safer on this one. It can't really, I don't think it can really see anything lower than $18, and I definitely do see some kind of increase with earnings. So um, I think that RKT is a very good company to invest in, as well as this is specifically for options because I'm mostly an options trader. Um, but options for this stock are kind of cheap right now because there hasn't been much price action. So if you don't have a lot of capital in your account, for example, like personally me, I don't really have that much capital in my account, but so I like looking for companies that are relatively cheap options. So this is looking really good for me. I'm definitely going to put some money into this. But obviously, it's your choice whether you want to do that. Um, this is just what I'm going to do. And as you can see from the MACD indicator, there's been a bullish cross in the MACD, and stochastic is a little bit overbought, which is a little bit concerning, but I don't think that should be that much of an issue as RSI is very stable and it looks like it's increasing. So yeah, RKT is definitely a play going into this week, and I think if it has good earnings on top of a very good market climate, this will definitely hit some really good levels. Okay, for our final stock pick, this is CRSR, which is Corsair Gaming, and this is also an earnings play, which is the same earnings time as RKT. So that's November 10th, by the way. And as you can see from this stock chart, the company recently IPO'd as well. And for those of you who are gamers, Corsair is pretty popular, I think, amongst gamers, and it could very much likely compete with the big companies like Logitech. And um, I think right now, with their earnings, it should be pretty good, especially with coronavirus. Gaming has been on the rise because people are at home and all that stuff. So I think that we could see some possible upside to the stock with earnings, especially if it has a good earnings and good market climate. Um, this is definitely a good choice. So in general, things to look out for with these stocks, you need to obviously see, do they have good earnings, and you need to check whether the general stock market is doing well. So if these two conditions are satisfied, the stock will for sure go up. Because, for example, if they have really good earnings and the stock market is dog shit, sorry for swearing, but like if it's garbage stock market, you could see like an initial pop in the stock price, but then a very quick decrease in the price, which is not what you want. You want it to pop, then reconsolidate for a little bit, but not too much, and then continue to go up. So that's what we're trying to look here for. So essentially, a lot of these stock picks are dependent on the market climate in general, and based on this technical analysis, I think that it's heading for a positive price action. So Yeah, for these stocks, for example, I think that options plays are very good because these stocks, like the actual price of the stocks right now, are not high. For example, like 50, 33. This is a little bit 123 on the expensive side, but pretty much the lower the stock price, the less expensive the options are in general, no matter if they're having increases or decreases. So if you're a low capital options trader, these are all very good, reliable stocks that I think could give some promising rewards in the future. And obviously, it's totally up to you whether you want to put money into it or not. But this is my plan for the upcoming week, and it's very critical to constantly keep an eye out on what the market's doing as you're going through, um, as you're making decisions. Um, and for example, just to show like um, RKT, like the options are pretty cheap. Like a $22 strike is only $161 compared to like I don't know Tesla's like on the thousands of dollars. It's just this is so much more accessible, and there's not a lot of risk. Um, there's a good risk to reward ratio for these stocks. So okay, I'll stop talking about all these. I'll let you do your due diligence and determine for yourself what you think could be good going into the next week. That's gonna be it for me. Thank you for watching.